Wednesday, March 3rd, 2021, Monaco 64, home of alternative economics and contrarian views. I've got Rafi Farber back on. He's got something very interesting to say about Comex and silver in particular. Rafi Farber, of course, is the editor of the Endgame Investor. You can find his work on Seeking Alpha. He's there as Austrolib. We're also going to talk about Murray Rothbard today, one of the giants of the Austrian School of Economics. It was his birthday yesterday, March 2nd. We're going to touch upon that. And we're also going to touch upon the U.S. Treasury's cash situation, the fact that they're going to spend, I think, about $1 trillion, but Rafi is going to clarify that for us. Some people seem to think it's equivalent of QE, so we'll clarify that. So Rafi, nice to have you back. How are you?
I'm doing well, thanks. How are you?
Good. And so could you tell us what's going on Comex? It looks like there's some more shenanigans going within the Comex vaults as it pertains to silver.
Well, I'm not sure if it's shenanigans. I can't prove that. It might just be laziness or just weird accounting. Did you get the resources I sent you?
Yeah, I'll bring them up if you want.
Okay,
there we go.
Okay, so basically what I saw today, if you scroll all the way down to the totals, all the way down, right? So in the totals there, you see that in the adjustment column, in total registered, in the second to last column, it says it's added 30.7 million ounces. Okay, so it makes it look like that over 30 million ounces have been added into the registered column. And if you look at the difference between the first column and the last column, which is the first column is today's registered silver stocks, and sorry, the first column is yesterday's registered silver stocks, and the last column on the right is today's registered silver stocks. There is a difference of that amount of about 30.7 million. So it makes it look like all this registered silver has been flowing into the Comex, and then I looked up and I saw that it's all coming from almost all of it is coming into one vault, and that's the last vault on the list. It says Manfra, Tordella, and Brooks. I just call it MTB for short. So for some reason, a whole bunch of registered silver just went into that vault all at one time. But then that didn't make any sense. So I looked at yesterday's numbers, and that's the number 4, the file for February 26th.
1 second. Let's get number 4. And can you explain to the viewers the difference between registered and eligible?
Yeah. Okay, so it's very simple. Registered silver is silver that is up for sale against contracts. It doesn't mean it's going to be sold, but if somebody calls for delivery, it's the registered stocks that they get. Right? Eligible means it's eligible to be sold, but it's not for sale, meaning it has to be registered first to be sold against a contract. So when silver moves off the Comex, first it moves from registered to eligible, to get taken off the market, and then from there it goes from eligible physically out of the building. So here you see something else. You see the totals, right? The totals from yesterday, from February 26th, are actually 130. What is that? 133 million registered, right? And then but the totals for today were 131 million registered. So the registered stocks actually went down about 2 million ounces. They didn't go up 30 million. Then I noticed that you have here an extra vault after Manfra, Tordella, and Brooks. Right, and that's the Bank of Nova Scotia, and that rang a bell to me because I remember in April last year, the ScotiaBank announced it was leaving the metals trading ring. It was just closing up shop. So and there was an article that I found again today that said they were going to leave sometime in early 2021. So basically, what happened is that the Bank of Nova Scotia is now offline. It doesn't have a vault in the Comex anymore, and all of its stock has moved to the MT&B vault. It's just a silver transfer. But still, the registered stocks are going down because silver is moving off. Since delivery started for the active March contract, which delivery started on February 26th, or calls for delivery started on February 26th. I think it's something like almost 1,000 contracts worth of silver is a combination of off registered or not to eligible and off of eligible and out of the building. So you have both stocks moving off sale and stocks actually moving out of Comex, probably headed to the mints to satisfy the premiums over there in the physical market. That's my guess.
Yeah. So, sorry, go ahead.
Just a technical point. I can't really say this is shenanigans. It might just be that this is a computer-generated list where the Excel just automatically adds up all the totals from all the vaults, and because one of the vaults disappeared, then it's just not in the numbers, and it looks like a decrease and then an increase. But it could be laziness. It could be they just didn't care, or it could be they're trying to mislead. But it doesn't really make a difference. What's happening is that silver is moving off, and that is the point.
I see. Yeah, it's been frustrating, the precious metals market. Yesterday, gold and silver did rebound a little bit. I see that today they're under pressure again. Could you tell the viewers what you think is going on, despite the fact that there's a lot of physical demand for gold and silver? The premiums are still really high. There's shortages, long waiting time. What do you think is going on here? Do you think the bullion banks are trying to cover their shorts because they know what's coming, especially with all the talk of inflation, yields spiking up, and also the Treasury Cash? If you could touch upon that, what effect that will have.
Right. So, I mean, it could be that, but that's the standard explanation that everybody goes to, and there might be some truth to it. The bullion banks have covered a lot of shorts. They're at their lowest, at least in gold. I didn't check silver, but in gold, they have covered, I think like 20,000 contracts since last week, and it's going to be more this week because it didn't take into account the Thursday and Friday fall. So they're at their lowest net short position since October 2019, which is pretty significant. It's still a significant short position. They're still in trouble if gold if they lose control. But what's happening in silver, I think, it's slightly different. You don't want to call it covering shorts. Maybe technically it is, but to be a little bit more descriptive about it, I'm pretty sure what's happening is that the same traders on the Comex, the same bullion banks, these are the authorized participants in the SLV ETF. Right? It's the same banks, the same guys. So I wrote an article maybe 2 weeks ago or something about how if they run how SLV changed its prospectus, and this is a free article. You can read it. It's not part of my subscription service. The SLV changed its prospectus, and they said they might run out of silver to stuff into the SLV ETF. So the way that they can get more silver is they can push the paper price down, and that forces the authorized participants to redeem baskets and move silver out of the SLV ETF, and that becomes available then to deliver against contracts if needed. So if they can push the paper price down by shorting it or selling contracts or whatever they do, then they have more silver available to back the SLV ETF, because they need that. If they can't back the SLV ETF, if silver goes much higher, like it did in the early February and they almost ran out, then there will be a premium on SLV in dollars over futures contracts, and there's no way for that to close because they would have to buy. So they have to buy silver on the Comex to feed it into SLV, but that itself would push SLV up, so it becomes a dog chasing its own tail in that sense. So they need extra silver, and the way they can redeem it through SLV is to push the price down, and that forces baskets to be redeemed. I think that's what's going on.
Yeah, have you seen here? I just attached or shared this Silver Squeeze GoFundMe, and they've raised over $100,000 now. I think they started this on Saturday, so it's been fairly quick. They raised this money, and this is where they're going to put billboards. We will be adding way more locations to this list. So Tesla headquarters outside the LBMA in London, HSBC London, JP Morgan New York, Deutsche Bank in Germany, Dublin, Ireland, Canada, Moscow, RHB Bank Singapore. So that looks quite interesting. So I think I tell my viewers always we need to be patient. The alternative is to get rid of your physical and join the banks, finance the banks, because when you put your money in the bank, it becomes an unsecured loan, and it's helping them continue to fund all these paper games. So could we go over? Sorry, go ahead.
Over Treasury Cash, right? So, wait, you wanted me to talk about Treasury Cash and whether
Yeah,
it's
that's
QE or
right.
not?
Yeah, Treasury Cash.
Okay.
Yeah.
So, just one thing before I mention that. I mean, there's another way that you can put the problem of using paper ETFs for gold. I mean, you can use them for leverage, but yeah, besides putting money in the bank, I mean, think about what you're actually doing with an SLV or GLD ETF. What you're doing is you are playing with gold and silver as a way to increase your dollar holdings or your fiat holdings. It becomes a trading game. You're using a silver vehicle to increase your dollars, right? If you really believe that gold is what is the money here, which is where I come from in my subscription service, and it's a philosophy that I hold. It's what I believe, that when the dollar collapses, people will go to real money, not Bitcoin. And I can explain logically why, but that's a different topic. When that happens, they're going to go to gold. So instead of using gold derivatives to increase your dollar position or to make dollar gains, what you want to do is use your dollars to increase your gold ounces and your silver ounces. That's what you really want to be doing. So don't use paper, except for maybe speculating on an option or something to, if you want to play that game. But that shouldn't be the main thing. That should be just, sprinkles on top if you want to try that. So about Treasury Cash. So a few weeks ago, I think Yellen said that she wanted to decrease the Treasury's cash at the Fed by $929 billion by the end of March, right? So since April, there's been something like they really loaded up on their account at the Fed. This Treasury Cash means just money that's sitting there in the Treasury's name at the Federal Reserve. It doesn't do anything. It's not fractionally lent out or anything like that. It's just sitting there. It's just fuel, potential, dynamite for the economy. So it hasn't been coming out yet because every month there's been a $1.4 or $1.5 trillion Treasury treadmill on the short end of the curve, where they sell about $1.5 trillion of treasuries to redeem the previous $1.5 trillion that came due, which all started in April when they raised all this money. So all that cash is sitting there. So the way it comes into the banking system is Yellen simply stops issuing these emergent cash management bills and all these other short-term treasuries, or issues a lot fewer of them. So then those principals are paid off. That money is given to the banks, and the banks put it in the money markets and then push the overnight rates or the 1 month rates into negative territory. And then that's like a shot of meth to the economy. It's very dangerous. So we have about $929 billion coming in to the banking system by the end of the month. Whether you want to call it QE or not, I mean, we can give all these academic terms for different ways of printing money, but it doesn't really make a difference what you call it. It's increasing the money supply. And that's what's going to happen is the trends that are now in place are going to be supercharged. I mean, commodities up, that's where things are going. I mean, when banks smell a trend, they all jump on it. So there's a danger of this getting out of control any day, any month, any week. I don't know, but the signs are clear. It's clear what's happening, and the paper price is the paper price. That's going to resolve itself at some point. Don't know exactly when, but it will. It always does.
Yeah, and this 920 billion or almost a trillion, the banks will take that and they will hypothecate it or leverage it. So it's going to be a lot more than just a trillion, right?
Yeah, it'll be fractionally lent out. The first place you'll see it is in the money markets. It's going to first of all, it's going to really steepen the yield curve until the Fed does something, because all the deficits and the debt, then all the spending that Biden is committed to, and hasn't actually spent the money yet, and more spending that he's going to be committing to when the $1.9 trillion stimulus or whatever they want to call it passes, and all this other spending. There's talk about now of a $2 trillion infrastructure. I mean, whatever, they just keep piling on. It doesn't matter what they are. So when the burden of all that debt falls on the notes category, which is 2-year to 10-year maturities, and also the bond maturities, the 20 and 30 year, then they're going to have to really increase the supply of those treasuries to raise all the money they need to fund this deficit. So you're going to see negative rates on the short end, the 1 month to overnight rate, even negative, and you're going to see even higher rates on the longer end until the Fed is forced to come in and smush the yield curve down with yield curve control. And the only difference between yield curve control and QE, it's the same thing, but QE is it's a constant amount of money every month, no target on rates. Yield curve control is a variable amount of money every month, enough to push the rates to a certain target. So yield curve control quantitatively is going to be a lot more QE than QE is. It's all the same, printing money to buy bonds. It's just how much and for what purpose.
Yeah, I've read up on yield curve control, and basically it's the central bank setting a peg. So let's say 1.5% for the 10-year, and if the market trusts the Fed, they'll let that target stand. But if the market decides to test that, then the Fed will have to print money to make sure that yield doesn't go above 1.5%. So yeah, very interesting. I read as well that the Fed might increase the yield interest on excess reserves so that this 920 billion doesn't go into the economy. Maybe that the banks will put it back with the Fed and earn some interest on excess reserves. Do you think that's possible?
It's possible. It depends if they're going to want to do that or they're going to want to get rid of the reserves. I don't know.
Yeah.
You'd have to be really an expert on the really deep, dark recesses of the black hole center of this whole rotten system here. But I think one of the more experts on that is Zoltan Pozsar. Sometimes he makes sense to me, sometimes he doesn't. He's really into the the Kabbalistic sources of all this money printing. I don't really get that deep into it.
Yeah. So before we go on to Rothbard to wrap up, you wrote to me on an email the other day about the Bitcoin and gold, the fact that real money is something that is physical because the world is physical. And just to show you here and the viewers, I've got a calendar here. It's a 40-year calendar I bought back in 2003. I think it was in Cornwall in the west of England. So there you go. That's like an analog. It's real. It's not digital. So and it's also adjusted for leap years. So I've gone here 2021 March. And it says today is Wednesday the 3rd. So with that, can you see that?
Wow.
Yeah.
Yeah. That's really cool.
Yeah. So I think some Swiss watches already also have that. They're called the Grand Complications. They're the Patek Philippe, but they cost like hundreds of thousands of dollars. So let's say you had this year only 28 days in February. That watch would have switched straight away to the 1st of March. It's quite amazing, and it does that forever. So with that, yeah, can we talk a little bit about what you told me the other day on that email?
Well, if we start out with simple logical reasoning here, the surface level. I mean, like let's take people want to say Bitcoin is money. And the evidence is empirical because people are using it as a medium of exchange. Okay, no, I'll argue that point. I'll say that's not true in a second. But that's really just like saying, minimum wage doesn't cause unemployment because we saw in this town the minimum wage raised from 10 to 15 and more people are employed. Okay, but that's an impossible statement. You cannot say in economics that raising the price of something above the market clearing price does not create a surplus of labor. Every time you raise the minimum wage, all other things being equal, unemployment will go up. Period. That is a deductive, logical statement. It cannot be disproven by empirical facts or empirical observations. Just like 2 + 2 cannot be proven under any empirical evidence to be 5. It's impossible. So Mises made this clear when he examined what the nature of money is and what gives it its value. The reason that you use dollars or pounds as money is because they had value yesterday. It's always tied to the past. That's how you do your own accounting. That's how you know how hard you have to work, how much money you have to earn, how much bills you have to pay, because they're more or less predictable, and that's what makes the money viable. But it goes back all the way into the past. It always has to be pegged to the past somewhere. So where did it start? the answer is it started with barter before there was any money in the system. It has to be based on some kind of barter, because otherwise there's no past to hang on to. You can't just introduce a new money and give it to everyone and say, okay, now start prices again, because nobody knows how to value anything in terms of anything else. Nothing works. So it's impossible. So what is Bitcoin? Bitcoin is referenced, its value, its purchasing power is referenced to the dollar. It's not underneath it. It's on top of the chain. And the dollar gets value because it is exchangeable for gold. It once was gold, and now it is still exchangeable for some gold, and therefore it has value. And Bitcoin has value because not because it is a medium of exchange. It is not a medium of exchange. It is a method for transferring dollars. And the Bitcoin unit, it changes based on its dollar value based on how many people want it. But for example, like I used to write for a website, Calvin Air. They just closed up shop because of the pandemic, and they're not making money anymore, whatever it is. So they paid me in Bitcoin, but they didn't really pay me in Bitcoin. They didn't do that. They paid me in dollars using Bitcoin as a method to transfer me those dollars. We agreed on a certain amount of articles, a certain amount of money per article, a certain amount of dollars, and then they paid me those dollars in Bitcoin. So when someone accepts Bitcoin, he's not accepting Bitcoin as a final payment. He's making dollar calculations and determining how much Bitcoin do I have to charge to make a dollar profit today or this month or this year or whatever. They always change based on the dollar. So logically, Bitcoin cannot be money. It can't, because it has to reference itself to the past. The past is the dollar, and the past of that is gold. So I said that I noted in this week's Torah portion. If you get meaning from the Bible, good. If you don't, it's a nice piece of trivia. This portion includes the infamous episode of the golden calf. Right. So if you think about what the worship of the golden calf is, right, it's trying to take gold, right, and turn it into a god and turn it into a spirit, or saying God is gold. There's some kind of confusion like that doesn't really work. But really, if you take what Bitcoin is, Bitcoin really is the mirror image of that. It's saying that a man-made computer algorithm program is now money, where it's trying to spiritualize money. Spiritualize, you could say, is digitized, because it takes the physical out of it. But really, the economy is 100% a physical thing. You can't spiritualize it. It's people exchanging goods and services. That's what it is. So it has to be based on physical. So Bitcoin is really a mirror image of the golden calf, which is physicalizing the spiritual. Bitcoin is spiritualizing the physical, and it will not work. The other thing I mentioned was the portion also talks about Bezalel, who's a guy from the tribe of Judah that built the tabernacle that was made out of gold and silver. He was the best gold and silver smith in the country, or in the people. And so the question is, who cares who he was? Why even mention it? So one of the medieval rabbis answers that it should be a complete miracle that this guy knew anything about gold and silver smithing, because he's been a slave for 210 years, and his whole family has been. What did he have time to learn how to work gold and silver? So I think that the rabbis are saying here that when you think gold and silver are dead, when you think that there's no memory of it left, it always comes back, because that is the money. But don't make it into a god or anything. That's a bad idea.
So with that, can we go into Murray Rothbard? Yesterday, it was his birthday, 2nd of March. He's one of the giants of the Austrian School of Economics, and talk a little bit about how the way he was is kind of being reflected in people like you and me in what we talk about.
Yeah. We're just pale shadows of him. But we definitely come from the same cloth. Not that I don't have my disagreements with Rothbard. I definitely have my disagreements with Rothbard, especially about Israel. Less so now. I mean, it's just gotten worse, and a lot of his points have been proven. But I wrote a book against Rothbard with Walter Block, defending Israel. So I have my disagreements with him there. But this article written by Jeff Deist, really, it explains that Rothbard was marginalized and pretty much laughed at, and his PhD advisor Arthur Burns, who was the head of the Fed, ended up being the head of the Fed. Arthur Burns tried to stop him from getting a PhD, delayed it, During that time is when Rothbard did his greatest work, arguably man, economy, and state. He had the time to do it because he was being delayed, not being allowed into the full-fledged academic community. Always being relegated to the side. But if you look back at history, right, who remembers Arthur Burns? He was just another money printer. Like, who cares what he did? Nobody's going to read him. None of his theories are interesting. Like, if you think about this era that we're in, this craziness, this insanity, are Paul Krugman's articles about COVID and economics, are they going to be remembered by anybody? Is Black Lives Matter, or all the gangs that are forming here, or Joe Biden, this nothing, is he going to be remembered as anything other than just, a placeholder for this crazy time? They're all going to be forgotten. It's going to be nothing. But the people that endure in history, that their ideas actually influence future generations and start movements of real people with minds who think about things and try to bring humanity forward intellectually. Those are the people on the fringe. They're never accepted fully by the society. So we work on the edges, and that's where we're comfortable, because we're not comfortable in crowds. We don't work well in crowds. So that's where we are now. We're telling people, remember, gold is money. All this other stuff, it's not going to work. And we're right now we're relegated to the fringes, but maybe not you and me personally. I mean, I'm not talking about personal remembrance history as my name. I don't care, but the ideas that we stand for, we know that they are true. We know that they will win, and that's what we're doing, and we're paying the price for it. Whether it's through disobedience and mask wearing, if you don't want to wear a mask, if you're afraid of the virus, wear a mask. But if you're making a statement, then do what you need to do, even if you're going to be relegated to the fringe, which is where you are. I mean, Rothbard is going to be remembered forever. For as long as people write about economics, he will be remembered. He is a fulcrum of the entire of the entire libertarian movement, and nothing is ever going to change that. Just like I look back in my past and I quote rabbis from the medieval times, because they're still there. They still influence my thinking. So in terms of getting through this period, it might be that we can't reach anybody in the present. It might be, or we'll reach a few people here or there. We'll activate some minds, turn some people on, save some people's wealth. But we also have to think about not just our own time period. We have to think about the future generation, and we have to send out messages to the future and say, don't let this happen to your generation. Don't let this happen again. The 1940s generation sent our generation messages. Don't let this happen again. And some of us take it seriously, and some of us don't. But some of us see it. Some of us see that not that everything is Nazi-like now, but it's getting closer. It's getting a lot closer, and that's clear to people who have Holocaust educations and understand what liberty is. But we have to send messages into the future like Murray Rothbard did. He wrote books. Books are messages to future generations that we are getting now, right? And in his generation, he wasn't appreciated as much as he is now. But the things that we get out now in the present to the future generations, they could save who knows how many people in the future. I don't know, but that's our responsibility.
Yeah, and I think we're already reaching quite a few of the younger generations right now. But like you said, you have to think long term, because the people on the other side of the court, which I would say the globalist people who don't have the good intentions towards humanity, they think in centuries as well. So the only way to compete with them is to keep fighting. And I saw yesterday that it was also the birthday of Texas as a republic, March 2nd. I think it was 1836. And the governor of Texas actually said that from Wednesday next week, Texas is going to be 100% open, every business, no matter what, and no more mask mandates. So I think that's a good step. I mean, Texas, the second biggest state of the union, if I'm not mistaken. Yeah. Unfortunately, the biggest state of the union is still in the dark ages. I think Governor Newsom came out and said it was reckless to do that. I think it's more reckless to do what he's doing anyway. So looks like you've come off here, Rafi.
Sorry, somebody was calling.
That's all right. So with that, do you want to wrap up this chat? Say what you're thinking and anything that you'd like to tell the viewers.
The Texas situation is very encouraging. It is. I wish he would make it more clear by saying, I'm not even going to put the numbers of COVID cases or deaths or hospitalizations into the statistics. Make it an individual case. If you're sick, go to the hospital. If you don't feel well, have some chicken soup. There's nothing else to say. But in Israel, it's getting really fascist, like really bad. They're making people get green passports to go anywhere, and I'm seeing these commercials on YouTube like, do you want to go to the gym? Do you want to have a normal life? Just get a green passport. You can do anything you want. And like treating us like animals, like dogs with a leash. They want to put ankle bracelets on returning citizens who come home, Israeli citizens who come home through the airport. Put ankle bracelets on them. I mean, this is madness. And Israel can lead the world. I mean, the Zionists always like saying Israel leads the world in this and that technology, blah blah blah. But they also lead the world in tyranny sometimes. And right now that's happening, and it's making me sick. But I'm still optimistic. At core, I am an optimist. And so gold and silver are down now. But this is the time to use your cash reserves to buy the dips. I will be buying on major sell-offs, on panic sells, and that this is the time for it. When you specifically feel scared, that's the time to move. So follow my trades at the Endgame Investor. You get a 2-week free trial, and join us. You can use your voice.
Yeah, and I'll be doing the same. Unfortunately, I have to wait a few weeks to get some extra cash. Probably by then, the market will have probably turned back up. Anyway, thank you, Rafi. It was great talking with you again, and we'll keep in touch and probably do another one of these very soon. Take care.
All right, take care.